The rising rumor of the dong and the dinar. Welcome back to IQD Global Intel, your front row seat to the unseen forces moving the world's money. Tonight, there's an unmistakable buzz rippling across trading floors and private chat rooms alike. Two unlikely names are dominating the global currency conversation: the Vietnamese dong, VND, and the Iraqi dinar, IQD. Whispers are turning into roars. Screens are flashing red and green. And the question on every trader's lips: could these two currencies be on the verge of something historic? Before we dismiss the chatter as just another online frenzy, let's look closer, because beneath the noise, something very real might be stirring. The Vietnamese dong. Quiet stability, hidden strain at first glance. The dong looks tranquil. Trading near 26,300 per US dollar, the numbers barely flicker. To the casual observer, it's business as usual. But beneath that calm, the State Bank of Vietnam, SBV, is juggling powerful and conflicting forces. Their challenge? Keeping exports competitive while protecting Vietnamese consumers from inflation. For months, the dong has shown a slow, subtle weakness, barely noticeable to most, yet meaningful to analysts. Some experts suspect the SBV is preparing for a controlled shift, perhaps a widened trading band or a modest devaluation. Why? Because global pressure is building. Vietnam's role as one of Asia's key manufacturing hubs means its economy lives and dies by global demand. As the US dollar strengthens, Vietnamese exports become pricier overseas. A slightly weaker dong could keep Vietnam's goods affordable, a move that might support jobs and production at home, but it's a high-wire act. Let the currency slip too far, and inflation could surge. Hold it too tight, and competitors like Thailand or Indonesia gain the upper hand. Despite these risks, Vietnam remains a bright spot in Asia. Foreign investment keeps flowing, GDP growth stays robust, and the government's commitment to reform continues. Insiders say the SBV is building toward a longer-term goal: a freer, more globally integrated currency that could appreciate once Vietnam stabilizes its domestic economy. So while online communities may fantasize about an overnight revaluation, the more realistic story is a gradual, strategic evolution, a slow unveiling of monetary independence. The Iraqi dinar. Between legacy and renewal now, we turn west to Iraq, where the dinar trades around $13.10 per US dollar. To most, it's a tightly controlled currency tethered to oil and politics. Yet for millions of believers worldwide, it symbolizes hope, a currency waiting to reclaim its past prestige. The Central Bank of Iraq, CBI, manages the dinar's every move. It's not freely traded internationally, and for good reason. Iraq's economy is still recovering from decades of conflict and dependency on oil revenues. But something has changed. In 2024 and 2025, Iraq undertook sweeping financial reforms, tightening dollar flows, cracking down on black market trading, and improving compliance with international standards. Its foreign reserves are swelling, fueled by strong oil revenues and improved fiscal discipline. That's rekindled talk of a policy reset, not a fairy-tale jump to $3 overnight, but perhaps a measured adjustment that could strengthen the dinar's real-world value. A shift to 1,000 or even 800 per dollar isn't impossible under the right conditions. Such a move would boost domestic purchasing power and signal that Iraq's economy is regaining credibility. A global turning point. Zoom out, and both Vietnam and Iraq fit into a bigger story, a gradual rebalancing of the global monetary order. The dominance of the US dollar is facing quiet resistance as emerging economies seek fairer footing. For years, smaller nations have managed currencies to maintain stability. But now, as global power shifts, those same nations are reconsidering how tightly they want to be tied to the dollar. When the dollar strengthens, their pain grows. When it weakens, opportunity knocks. And right now, both the dong and the dinar sit at a tipping point between constraint and transformation. From speculation to strategy for years, discussions around these currencies have split into two camps: dreamers who believe in massive overnight revaluations, and skeptics who dismiss such talk as fantasy. But the truth lies somewhere in between. The dreamers are right about one thing: both nations are changing fast. And the skeptics are right, too. Real change happens through policy, not wishful thinking. When those forces merge, vision with reform, financial revolutions begin quietly. They don't start in Washington or London. They start in Hanoi's industrial corridors and Baghdad's digital banking halls, where the groundwork for transformation is being laid one policy at a time. The physics of pressure currency systems can only absorb so much imbalance before something shifts. When a currency's official rate no longer mirrors its economic reality, tension builds. For Vietnam, that tension comes from growth. For Iraq, from recovery. In both, the same dynamic applies. Fundamentals have evolved faster than policy. At first, everything seems calm. Then cracks appear, importers complain of dollar shortages, exchange bureaus post quiet alternate rates, and confidence begins to waver. That's the early warning sign. History shows the pattern well. 1. Complacency, everything's fine. 2. Tension, something feels off. 3. Denial, it's temporary. 4. Distortion, the market bends under pressure. 5. Release, A. Revaluation, devaluation, or regime shift. From Thailand's 1997 crisis to China's 2015 currency tweak, this rhythm has repeated time and again. And it may be quietly unfolding once more, but this time driven by strength and transition, not collapse. A snap toward reality. When traders say a rate could explode, they don't mean chaos. They mean compression meets release, a long-held spring finally snapping to where it naturally belongs. For Vietnam, that could mean widening the dong's trading band or linking it to a currency basket. For Iraq, it might mean a recalibration upward, rewarding the structural reforms and oil-backed reserves it now holds. Either way, these are not fantasy moves, they're economic alignments long in the making. The human undercurrent behind every chart are real lives. Vietnamese workers paying more for imports, Iraqi shopkeepers struggling to access dollars, and traders across the world watching the signals, waiting for confirmation that change has begun. Markets run on emotion as much as math, and right now, that emotion is building curiosity, anticipation, and a sense that something's about to give. Final thought. The stillness before the shift. Every financial storm begins in silence. Policymakers will always deny change until the moment it happens. But the data, reserves, inflation, import costs, and policy behavior rarely lies. Both Vietnam and Iraq have reached points where small shifts could have outsized consequences, not because of rumors, but because the underlying numbers demand adjustment. From Hanoi's ports to Baghdad's oil terminals, the winds are changing. The world may be on the brink of watching two long-overlooked currencies begin to reflect the true power of the nations behind them. So whether you're an investor, an observer, or simply fascinated by the theater of global finance, stay alert. Because sometimes, the quietest markets conceal the loudest moves. Every surge begins with stillness. And the air tonight feels very, very still. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.